The number of months it would take to sell every single family home on the market in the Coachella Valley just hit 4.8 months. That's our tightest supply since October 2024, and inventory has now fallen year over year for 5 straight months. While that was happening, the national market moved the other way. Pending home sales across the country just dropped to their lowest level since January. The desert and the nation are pointing in opposite directions right now. And if you own here or you're thinking about buying here, that gap is the whole story this month. I'm Laura Lake with LPT Realty. Let me show you what's going on. Let's talk nationally. July existing home sales came in at a 4.06 million annual pace. That is down 1.7% from June, but actually up 0.7% from a year ago. So closed sales are holding steady. The national median price was $431,400, and national supply held at 4.6 months. But here is the forward-looking number. The pending home sales index, which tracks contracts signed rather than deals closed, fell by 2.3% in July to 71.2. That is down 2.2% from a year ago, and the lowest reading since January. Pending sales are tomorrow's closing. So nationally, the pipeline is thinning, even while the closing numbers look fine. The desert just did the exact opposite. Here in the Coachella Valley, single-family homes median sale price was $650,000, and last July, $650,000, exactly flat. And July 2024, $637,500. So we have had 2 full years of essentially flat prices. If you only looked at price, you would not think nothing is happening. Let's look a little deeper. Active inventory was 2,129 homes, down 25.4% from last July. And that is the 5th month in a row inventory has fallen year over year. New listings dropped 14.4%. Months of supply went from 6.7 a year ago to 4.8 now. Days on market fell to 69 days from 73. And here's my favorite number this month. Closed sales were down 11.3%, but homes going under contract were up 4.3 year over year. Closings look backward, contracts look forward. The forward number is positive. On top of that, sellers got a 95.8% of list price in July, up from 94.7 in June. Buyers are negotiating less, not more. Fewer homes, steady demand, faster market time, firmer prices at the negotiating table. That is how a market shifts quietly underneath a flat median. As we roll into season, starting around mid-late September, our valley usually sees an increase in inventory until around early November, then again starting around the 3rd week of January. Be sure to subscribe to get notifications for next month's real estate market update to learn if we continue that trend locally or not this year. La Quinta is going to generate a scary headline this month, so let me get ahead of that. The single-family median in July was $644,000, down 14.1% from a year ago. Sounds bad. It is not. La Quinta closed just 53 single-family homes in July. And when the sample is that small, the median bounces around based on which homes happen to close. In June, it was $880,000. I promise you, nobody's house lost a quarter of its value in 30 days. So don't let the doomsayers scare you. The steadier gauge is price per square foot, and that was $571 in July, up 16.8% from last year. Up, not down, and by a lot. The real La Quinta story is supply. Inventory was down 30.8% year over year, the steepest drop of any market I track, down to 4.2 months of supply. The sales to list price ratio jumped from 89.8% in June to 96.9% in July. In June, La Quinta buyers were winning double-digit discounts. In July, that door mostly closed. If you've been circling a La Quinta property waiting for the market to soften further, the data says it went the other way. Now let's talk about Palm Desert. Palm Desert put up the flashiest number of the month, Single family median, $750,000, up 29.3% from last July. Same as La Quinta, that is mostly mixed. 54 homes closed and fewer of them were entry level, so the median jumped. The honest number is price per square foot, up 10.4% to $385. Still the strongest real appreciation in the valley, just not a 29% moonshot. Inventory fell 20.4%, supply is at 4.5 months, and the homes going under contract rose 15.6% year over year, the biggest forward-looking gain of our three markets. Now, Palm Desert is condo country, so let me split that out. Valley-wide, condo sales were flat year over year, while the condo median rose about 12%. The condo supply is sitting at 5.6 months versus 4.8 for houses. Translation, the condo market is steadier on volume, prices are quietly climbing, but the condo buyers still have more selection and more negotiating room than house buyers. If you want a Palm Desert condo, that extra breathing room is real, and it is shrinking. And with the new Fannie Mae and Freddie Mac tightening their condo project standards that took effect this month, we could see condo sales and prices move in the wrong direction. Time will tell on that one. Let me put the national picture and the desert side by side, because this is the segment to send to anyone you know who's thinking about buying or selling here in the desert. Nationally, the leading indicator is falling. Pending sales, lowest since January, down year over year. Locally, our leading indicator is rising. Desert contracts signed were up 4.3%. National supply held flat at 4.6 months over the past year. Ours collapsed from 6.7 to 4.8%. The desert is tightening faster than the country, and some reading national headlines would have no idea. What does it mean if you are comparing to LA, Orange County, or San Diego? You still have more room here. At 4.8 months of supply, you can negotiate in the desert in a way you simply cannot in a coastal market that's running under 3 months. But the gap between now and season matters. Between today and November, you are shopping against summer competition. After Thanksgiving, you're shopping against every snowbird and relocator at once. 5 months of inventory, declines already baked in. Here is my unfiltered take. 2 years of flat prices at $650,000 is not a weak market. It is a market that absorbed 7% mortgage rates, a post-COVID hangover, and a wave of inventory, and did not give back a dollar of median value. Now the inventory wave has receded for 5 straight months and demand held. At showings right now, I'm seeing fewer options for my buyers and better offers landing for my sellers than at any point in the past 2 years. Prices follow supply with a lag. If this inventory trend holds through season, flat is not the word I expect to be using this time next year. August is for downsizers, the folks selling a bigger coastal home to right size into the desert. 2 things in this data are yours. First, the timing math still works. National closed sales are positive year over year, so listing your coastal home this fall is a workable plan, and rates just eased a touch, which helps your buyer pool. Second, know where the competition is. The heat index scores the $350,000 to the $500,000 range as the hottest segment in the valley at 55 to 57, while everything above $1 million scores 40 or below. The hottest is exactly where lock and leave condos and smaller homes live. So the move is to line up the coastal sell for early fall and get your desert purchase done before season. Targeting condos if you want negotiating room, because at 5.6 months of condo supply, you still have some. 3 things between now and next month's report. 1, the Fed September meeting and whether this week's small rate relief turns into a trend. 2, whether July's jump in signed contracts shows up as stronger August and September closings. If it does, the tightening story gets confirmed. 3, the October listing season. After 5 straight months of inventory declines, the size of the fall listing wave will tell us whether 2027 starts tight or balanced. If this was useful, subscribe, because I do this breakdown every month with real MLS data, not headlines. If you want the numbers for your specific neighborhood or country club, My contact info is right below, or reach me through desertrealestatepartners.com. Ask me anything, no pressure, ever. I'm Laura Lake, your Desert Real Estate Partner. See you next month.